Hey guys, James here with Waterford Business Solutions. And as an accounting firm, one of the things that we deal with is taxes. And there really is only two things that are certain in life, the saying goes, death and taxes. And well, today we're going to talk about the latter. It's a little more fun to talk about, even though not by much, to be honest. Most people really don't enjoy talking about it. But we're going to talk about why do we pay taxes, and more specifically, why are we paying in taxes throughout the year, and why do we want to pay estimated quarterly taxes if we are business owners, and how that benefits you in the long run. So join us today as we explain just that and go into talking about withholdings on your W-2s and estimated quarterly taxes. Before we jump into that, I do want to go ahead and invite you to go ahead and like and subscribe to our channel here to get videos like this every Monday, giving you information on running your business, understanding your finances, understanding taxes, anything and everything like that. We really like to help our clients and even just pros in general understand and better themselves in a financial world. So go ahead and hit that subscribe button down below, turn on notifications, like the video, leave a comment, share it with anyone that you think that could benefit from it, as it does really help us out, and it also gets more people educated on what they could do to better themselves. Now I'm going to take this tax discussion in kind of two different directions. We're first going to kind of start from the W-2 perspective on withholdings. And every time you are getting a W-2 paycheck, you're going to end up seeing more than likely some federal or state taxes withheld. Now, if you've got everything set up, you supplied your employer with the correct W-4, you filled that out correctly with any deductions or anything like that for children or itemized deductions or anything there, in theory, if you don't have any additional income, that W-2 or your paycheck will withhold approximately what tax is going to be due on a federal or state level for you pretty much automatically. And that's actually very nice. It helps you out. And that's exactly what we would want to see there, because we want to owe as little or get paid back as little as possible at the end of the year. And when the new W-4s and W-2s came out back in 2018, it did help that a lot. It did get refunds down substantially. It got pay-ins down substantially, so it got everyone to a much easier area. And that's being done every single paycheck that you have, so that at the end of the year, you don't have a huge tax bill that you owe. It's basically just like a tax savings account. You pay in your Medicare, you pay in your Social Security, you pay in your federal taxes, you pay in your state taxes if you owe any there, and that all happens pretty much automatically behind the scenes. You don't really have to think about it. And as long as that W-4 is filled out correctly, at the end of the year, you should be within a few dollars, maybe $100 or $200 of refund or owing. That way it's not, oh, you need to pay in $5,000, or oh, here's $5,000 back. And while some people do enjoy that huge refund at the end of the year, and you can still set it up to do that, it's nice to have that consistency there, because it's basically a fix it and forget it. If you think about, oh, well, I want to invest for my retirement, and you set up a 401k, you set that up, you budget that into your life, and you know what you're going to be taking home after the fact, and it helps you stay on top of everything. Whereas with the taxes coming out of your paycheck there, it's kind of the same concept. As long as you set all the paperwork up correctly, it will withhold everything pretty close to accurate, and at the end of the year, it'll be nice, clean, and easy there. And your employer, they're the ones that are pretty much responsible for maintaining all of that. Based off of the W-4 you provide to them, they have to put that in. Whatever payroll system they're using should be withholding those taxes for you automatically. And then your employer, on a weekly or monthly basis, is going to send that money to the IRS for you so that you don't have to think about it. Now, Is the employer actually really doing anything here? No. Most of the time, our clients are using ADP, QuickBooks Payroll, Paychecks, Gusto, something like that, where the system is going to come in here and pull that money out, calculate all of that based off of the W-4 that they input, and then go ahead and automatically on a certain day of the week, send that money to the IRS, send that money to the state agencies that need it, and then file all of the paperwork. But that's going to track everything so that at the end of the year, the state and the federal government knows how much you've paid in, so that when you do your taxes, they know what you earn, they know how much you've paid in, everything like that, in order for you to go ahead and get that potential refund or show what little bit you may or may not owe. Overall, it keeps it very clean, very simple, and in general, it's a very seamless process. Now, it is something that at minimum, and this is for super, super small employers, they have to pay in quarterly, if not monthly, and a lot of employers actually have to pay in weekly, even for medium-sized employers. If you're running payroll and you're doing basically more than about $500,000 in payroll a year, you're going to have to be doing about weekly pay-ins to the federal government. Could be a little different depending on your state. Remember, we don't get too into that. But it's a consistent regular pay-in because the IRS has a regulation that you have to pay in reasonable taxes in a timely basis. And that's a good segue into kind of our second discussion here, estimated quarterly taxes. Being a W-2 employee is super simple. As you can see, pretty much all the tax work happens behind the scenes if you filled out your W-4 correctly. But if you're a 1099 employee, a 1099 contractor, or if you're a business owner, or anything and everything like that, you would need to go ahead and make sure that we have estimated taxes. We've got to take a look and say, okay, this is how much money that I've earned, this is how much I think I'm going to earn, and we've got to plan all of that stuff out here so that at the end of the year we can say, well, we think that we're going to earn $100,000 in profit. That means we're going to have $100,000 of additional income that isn't being taxed because the IRS doesn't know about it until the end of the year. However, that same requirement of paying in reasonable taxes in a timely basis still applies to that $100,000. Even though you didn't know you were going to need to pay it until you knew the final numbers, you still have to pay in what you think you're going to owe. And that is a huge thing that many, many people don't do. So we have to make sure that we're monitoring that we're watching it, that we're taking care of everything there. What we have to do is go through, again, monitor every single thing that's going on, and then what we're going to do is figure out what the end of year profit of the business is going to be, what the taxes are on that, whether we're going to have self-employment taxes in addition to just income taxes, etc. there. Then we're going to figure out what that end of year is. Let's say it's $100,000. Easy numbers, let's say there's $25,000 in taxes owed to the federal government. So we have to figure out on a pay-in basis, and the federal government sets this on a quarterly basis, typically going to be around April 15th, June 15th, October 15th, and January 15th. That's going to be typically around when these payments are due. We've got to divide that $25,000 into 4 different payments to pay in on those dates. If you don't do that, at minimum, they're going to take a look at how much income you had last year, how much tax liability you had last year, and compare it to where your income and tax liability is this year. Now, if you moved last year from being a W-2 employee and having everything going on automatically for you to being a business owner with self-employment taxes, you're not going to get hit with huge penalties, and we can always request for a penalty abatement here. However, you're still going to need to pay in and pay those taxes in at some point. So if at the end of the year, it's $25,000, and you can pay in smaller little tidbits here and there of 7,000, 7,000, 7,000 instead of 25,000 all at once. It hurts your pocketbook less in the first place. So even if you're not just trying to avoid the penalties, what do you want me to do at the end of the year? Do you want, as your tax accountant, me coming to you and saying, hey, I need a check for $1,000? Or do you want me as your tax accountant, and I had this happen the other day, where I told a client, okay, I need a check for $40,000. That's a whole lot more money that they've got to pull together all at once. And they may have that sitting there. But the benefit beyond avoiding these penalties is making sure that we're making smaller little divots in this liability as we go throughout the year, so that when you get to the end of the year, it's a whole lot less money owed there. Now, sticking on that penalties, let's say that you earned $100,000 of self-employed income last year, and you earned $100,000 this year. Nothing changed. So ultimately, you should have paid in the same amount of taxes no matter what. The penalties will be much, much higher. And basically, how these penalties are figured out is they're going to take a look at how much money you should have paid in taxes, how much money you paid in currently this year, how much you paid in last year and what your last year's was at, and then figure out kind of the difference of, okay, well, at minimum, doing basically 1.1 times where they were last year. This is the taxes where they were this year. Divide that by 4. Where did their payments go in, and how much more tax is there? If you paid in below that 1.1, they're going to basically take a look, and they are going to take the base rate that they have, and that changes quarter by quarter. It will reset based off of the Federal Reserve rate, and it'll be that Federal Reserve rate plus a little bit, and they're going to charge interest off of that. Plus, you might get a underpayment penalty in addition to that. So if we're talking 10,000, 20,000, this isn't huge numbers. Generally, we're talking maybe 50, 60, 100, $200. But if we're talking 50, 60, $100,000 in tax liability that goes unpaid, now we're talking additional $2,000, $4,000. I've seen $6,000 in additional penalties that a client gets charged because they weren't paying in throughout the year. Well, at the end of the day, that penalty and interest is additional taxes. So if we're talking $50, $60, not a huge deal. But if we're talking $3,000, $4,000, $5,000, honestly, even anything over $1,000, that's a lot of additional taxes. So a huge thing that people always ask me is, how do I pay less in taxes? Pay in these estimated payments, because that will help to reduce a lot of your tax liability. Is just paying in these estimated payments in the first place. So huge, huge thing right there in and of itself. The other thing to consider with why we pay in taxes, technically all of your tax liability, whatever you think you're going to owe in taxes, even if your taxes aren't done, is due by April 15th. Doesn't matter if you've requested an extension or not. The taxes owed are due by April 15th. That never changes, or whatever the tax deadline is. It might be April 13th, might be April 16th, but around that April 15th deadline. You may get like a special due to a natural disaster abatement or something like that, but if you request an extension, that extension only gives you time to file the return. It doesn't give you time to pay the taxes. So often I have clients that choose to request an extension but don't actually pay in any tax liability. And when we file the tax return, they get a letter saying you've got a underpayment penalty, interest for underpayment, and a penalty for not paying in a timely manner. that penalty that we were just talking about that could have been $50, $60 for maybe $1,000, $2,000 in tax liability, that penalty is now several $100s. So it's super important, even if you don't want to pay in estimated quarterly taxes, make sure that you have all of your tax liability estimated as close as possible, and honestly have a little bit of an overpayment in by April 15th or by the tax deadline. Otherwise, the penalties and interest will be so much higher for you. Guys, as you can see, paying in taxes it's complicated. And that's why we want to make sure that we're doing tax planning, not just to find ways to save you money on your taxes, but more importantly, to find ways to make sure that we're paying in taxes in a timely manner, keeping those penalties down, keeping that interest down, and making those payments a little bit more palatable. If that's something you need help with or want better understanding of, feel free to reach out to us here at Waterford Business Solutions by either shooting us an email at info@waterfordbusiness.com or giving us a call at 864-351-0852. As always, you can also just follow our channel here. Like I said at the beginning, we're constantly putting out information like this every Monday to help you guys out. So like, subscribe, share this with anyone that you know so that they can also get super important information and help to better understand their finances and their business. Until next week, guys, have a wonderful rest of your day.